The Naspers stable is making good on its promise to unlock value from its e-commerce portfolio. The value of the group's 25% stake in Swiggy has more than doubled after the Indian company made its stock market debut today. Prosus, the company's largest investor, sold shares worth more than 500 million as part of the IPO. Swiggy is an online food ordering and delivery platform which connects consumers to more than 225,000 restaurant partners and stores in more than 680 cities. Virgin Active's given Brait a boost. The firm says the health club operator, which makes up more than half of its total assets, delivered a strong operational performance driven by active members. It's also pointed to an improved showing at Premier. On the back of this, Brait's reported a return to the black at the halfway stage. It's posted a comprehensive profit of 724 million rand. That's from a loss of 300 million rand a year ago. Emira Property Funds lifted its interim dividend by just over 1%, following a near 7% rise in distributable earnings. The South African-based REIT says its local portfolio performed well, with most key indicators exceeding expectations. Emira has added that its US portfolio remains stable and that those investments have delivered in line with forecasts. The fund expects distributable income for the year to be marginally higher than the prior period. Solid, that's how Dipula's described its annual performance. The Real Estate Investment Trust has posted a 7% rise in revenue, but higher property-related expenses weighed on its bottom line and contributed to a 4% decline in distributable earnings. Looking ahead, Dipula says while the long negative cycle for real estate is not yet over, there are signs of improving fundamentals. As such, it's expecting an improved performance and is anticipating distributable earnings growth of at least 5% for the year ahead. And over 76 billion rand has been pledged in support of the KwaZulu-Natal economy following a recent two-day investment conference. This will go towards the creation of around 68,000 jobs in the province. Here's KwaZulu-Natal's Premier Thamsanqa Nduli commenting on the development.
Also a call to further investors that KwaZulu-Natal is open for investment, and that we are working towards ensuring that the environment is conducive for business to flourish in our province. That's why then we are here today. For the people of KwaZulu-Natal, this initiative will in fact deliver new opportunities, job opportunities. We have decided to prioritize this kind of an initiative this moment, so that we expedite the agenda of the inclusive economic growth and job creations.
Further afield, Japan's 7&I Holdings gets buyout offer from Ito family member. This unexpected white knight bid comes as the company is considering a rival offer from Canadian convenience store operator Alimentation Couche-Tard. Here's more detail in this package report.
Japan's 7&I says it's received a buyout proposal from a member of its founding Ito family. The news on Wednesday follows a report that the 7-Eleven owner was considering a management buyout offer worth up to $58 billion. The proposal from Ito Kogyo is non-binding and is being reviewed by a special committee set up by 7&I to look at a rival offer from Canada's Alimentation Couche-Tard. In a statement, the Japanese retailer said no decision had been made regarding the proposal. But if a deal reaches $58 billion, it would make it the largest management buyout in history. 7&I's shares surged in afternoon trade, having been suspended earlier in the day. They closed up 12%, valuing the company at around $42 billion. The sprawling Japanese retailer has been under pressure to deliver more for shareholders, particularly after Circle K owner Couche-Tard emerged in August with a takeover bid that sources say it has since sweetened to $47 billion. Going private would allow 7&I to continue under current management and remove pressure from shareholders to sell off more assets. While the Japanese 7-Eleven convenience stores are a money spinner, the company has been hurt by poor performance at its supermarkets.